What's going on, everybody? You got Sang Lucci. You got the Sang Lucci crew here. It is Lucci and Charlie, the professor, who, by the way, doesn't have a lot of Twitter followers right now. You know, I'm feeling.
Dude, I'm getting up there, man. What are you talking about?
It feels like you're being left out.
I need a shout out. Is that what
You're being left out.
Dude, I got 238.
You got 238.
I've been on Twitter for like a month and a half.
All right, guys, listen. Let's give the professor some love here.
Yeah, man.
Follow him at @theprofessor_SL. If anyone wants a repeat of that, yes, he's
serious knowledge.
So at some point, eventually, you know, he's gonna be deep in the psychological game, I'm sure. So you got Sang Lucci. Hang on 1 second. Here it is. We always have that. Here we go. Okay, so mailbag again for Thursday. What's today? November 21st here, right before Thanksgiving. Actually, are we going to be doing? No, we're not going to be doing next week.
We will not be on next week, guys. Yeah, so enjoy your Thanksgiving.
Right.
We will be watching football and passed out drunk on the floor.
Right.
Nothing.
Absolutely.
Like good Americans should be. So
absolutely. All right, guys. So listen, we have a we have a very important webinar.
Big deal.
It's a big deal. It's a big deal. It's at 5:30, so we're gonna make sure we get done here at 5 o'clock. So with no further ado here, what I want to do is just share my misery right now with you guys. And you know, if for anybody who's been watching, you know, you know why I'm miserable. This December monthly option that I'm showing you right now, we bought at 13 cents. Okay. Now, we bought at 13 cents, and we bought 14,000 contracts. So what is that? That's 200 grand right there. That's almost 200 grand.
Right.
It's like $1.80, $1.89, somewhere around there. So you got 189 invested, and this is where the option is today. Now, I got out at, let's say, an average cost of 33 cents. 33 cents. We made like 300 grand on it. You know, we made 300 grand on it. Now you take a look at this option right here, and we left a nice 700,000 on the table. So I'm feeling pretty miserable right now. And if you take a look at Bank of America, or sorry, J.P. Morgan, Citigroup, Wells Fargo, Morgan Stanley, we had massive positions in all of this, which again I cleared out of completely. And well, that's what's going on.
I mean, he talked about it last night, guys, with Garrett over at Confidence Corner.
Right.
That recording is on the website too, sanglucci.com, if you want to check it out.
Definitely check that out, because there's some good psychological stuff in there. And remember, what happened today, it didn't happen yesterday. So now it's compounded.
Right.
So I felt like shit yesterday, and now I feel like
we should talk about it. Like, what is...
And hence why I'm drinking this. You guys see this?
Don't even...
This is what brown people drink. Okay?
When they want to make themselves more miserable than they already are. That stuff is horrible. So we were talking about it earlier. Like, why? So what? So you were watching the P&L, right? I mean, the gist of it is like it's gut-wrenching to see your P&L go from up 700 grand to 400 grand.
Yes.
Right. And so you basically saw 300 grand evaporate.
And I panicked.
And you were like, and because you were right on the trade.
I was right.
You called this whole thing.
I was right. Right, but you know, being right is whatever. You know, if you're making the money, I mean, that's what it is. And we panicked, and it is what it is. All right, so let's get into the mailbag here. By the way, we're going to announce the winner of the scholarship.
Absolutely, we are. Let's wait. We're going to wait for some people to kind of trickle in here. I'm sure there's some guys who applied who haven't gotten here yet, so we're going to wait for a sec.
Okay.
But
okay.
Yo, Lucci scholarship that says
Eric gets to send one.
It's too late.
Too late, brother.
Submissions were over last Wednesday Wednesday night at midnight. So
right,
we'll do it again Q1 of next year, guys. So stick around for that.
All right. So let's start getting into this. This is coming from Stephanie. Okay, Stephanie is saying, how do I calculate my gains when I buy a call option, and what is the best way to play it? Okay. So she's giving me an example here. Current stock price is PRTA at $26.72. I would like to buy 7 contracts. I think it will go to $30 in about 20 to 40 days. So she's asking, what could you do with that particular trade, and then how would you play the thing to begin with? All right. So let's just do a quick screen share for her. Let's see. We'll get a nice options chain for you guys. And let's take a look at this options chain. What is it? PRTA? What the hell is this? I don't even know what this is. Okay, so she's saying this stock is going, she thinks it's going to go to 30 bucks. Stock right now was yesterday at around 26 and change. She thinks it's going to go to 30 bucks in about a month or so. If that's the case, you know, these December monthlies are always open. Notice that you have a $5 spread here. This could get a little dangerous, and check out how illiquid these options are, guys. I'm going to show you another screen of this one December monthly option, and you're going to be thoroughly disgusted. Let's take a look at this option. So this is your option here. Now, granted, market's closed and everything, so you know, but usually, you know, you'll see some liquidity here for you to be able to do something with. Notice there were 0 contracts traded today.
You don't want to play that.
Absolutely none. So she only wants to buy 7 contracts. Okay. So what I would recommend is taking something that, let's say, is in the money. So I would recommend buying, let's go back to that options chain for you. I would recommend buying the 25 option, something that's already in the money. And then what you can do here, and seeing as how this stock is trading 25 bucks right now, what you can do here is just say, okay, this stock is in the money right now, valued at about, you know, $1.75. You know, if you look between the bid and ask, and if you get another 5-point move here, you take a look at something that's already 5 points in the money, and you get something that's about $5.50, $5.56 bucks. Okay, now remember, you always have to factor in time decay and things like that. But if this stock gets to 30 bucks, well, let's say within a couple of weeks, well before expiration, you know, your option is going to be in the money, so you should be able to sell this for 5 bucks. So being able to buy this, let's say in between the bid and ask, let's see if you can get a fill for 175 or 180. That would be great. It's going to take you a little while because there's no liquidity on any of these friggin' options. If you want to play it even safer, I would go out to January, and then maybe you can buy the 30 there. Okay, but there's pretty good risk to reward here if you are trying to if you do get a move of 5 points. But again, where you'll lose some of that money is because of the spreads here. Okay, and depending on where your fill is. So my best advice to Stephanie is don't be a herb and buy the offer. Okay, if you got a 65-cent spread here, don't just buy this because you can right now. Okay, take your time, throw orders out in the middle and see if you can get fills. Okay.
All right, and just because we don't even do disclaimer stuff on this, but we are not registered investment advisors. We have to say this. Our lawyers are having seizures right now. We're not registered investment advisors. Stephanie, what he just said is theoretically what he would do if he were doing it.
Yes.
You are the only one responsible for what you do.
Yes. So don't come back to me and say, yo,
for some kind of lawsuit.
What happened? Yeah. All right? That's your ass. That's not my ass. Okay? Yep. All right, so here we go. Next question here is from John Lee. Hey, everybody, want to ask a quick question. Which stock ticker would you recommend for tape reading? I'm currently working and pretty much have only 30 to 45 minutes to trade in the morning. Will screen capture the entire day and review later. A good question. You know what? To be perfectly honest, though, you know, somebody who's working and can't devote that much time to trading during the day, you know, but again, if you're doing the screen capture and you're going to go through the entire day, I would recommend LVS. I would recommend LVS because it's a thick tape and it's easier to read. It's a lot easier to read than, let's say, the Googles and the Apples of the world, which everybody wants to trade. So I would take one of those.
And it's important that you, I mean, because what you were doing at the prop firm was watching the tape, right? Going back through finding good trades from the good traders, right? And then basing off that. So, I mean, if you, whether you're in our chat or wherever, if you have access to people who are making money in LVS during the day, you know, the point is to pinpoint, you know, what they were seeing in the tape and trade and draw the correlation between cause and effect. I mean, that's the goal there.
Definitely. All right, so now we got D-Jack. D-Jack is a subscriber to one of our chat rooms. Number one, he says, do you incorporate implied volatility swings in that huge financial position that you were holding? Negative. Negative, not at all. Again, I don't use implied volatility as a metric. I don't use it as a reason to get in something. I don't look at it as an indication whether it's high implied volatility or low implied volatility. The way that I teach, you know, in my classes and the way that I trade is very common sense. You know, the tape is showing me buyers, I'm going to hop in a call. The tape is showing me sellers, I'm going to hop in a put. the tape is showing me nothing, I'm going to go play video games. I mean, that's...
PS4 is the best risk management system we've had yet, I think.
Right. PlayStation 4. I don't know what the hell that was. That sounded like a private message. Oh, lovely. Adam is updating the chat.
More technology.
Okay. And then 2, which is something that we really got to hammer home. I have an option account at TOS, but it only allows 3-day trades in 5 days for accounts below 25,000, which I fall into. How do I get an account with unlimited day trades? This is a question that we get all the time, and we will continue to get the question because nobody fucking listens.
Pete just G-chat and said, tell Charlie not to yawn on camera. What do you want me to do, Pete? What do you want to do? I can't suppress a yawn. All right? I'm working my ass off.
All right, listen, guys. This is called the pattern day trading rule. If you don't know what the pattern day trading rule is, damn it, we have Google. We got Google. You know, you don't need me. You got Google. You can do all the research that you need to do. Now, here's the deal. For all brokerage accounts, for anything that's under 25,000, you are subject to the pattern day trading rule. What is the PDT rule? The PDT rule is that it restricts the amount of in and out activity that you can do. Okay, and in this case, with most brokers, 3-day trades in a 5-day period. Okay, it's a rolling period. So this means if you go in and out of something in a day, that's 1-day trade. If you go in and out another time, that's 2-day trades. If you go in and out again, that's 3, and then you get locked out for 5 days, or maybe it's 3 days or something. I don't know, whatever it is. Okay. So what happens is that most people who have accounts that are under 25,000, they get very frustrated because, number one, guess what the number one problem for accounts like this are? You don't want to lose your trading ability, so you end up holding a position that you shouldn't hold. Now, if anybody's in here and has done the same thing, go ahead and scream out in the question box, and I'm sure that's half of you because I used to do that myself. Now, the way to get around it, the way to get around the PDT rule is tell your broker you want a cash account. You want a non-margin account. Write this shit down so you don't have to ask this question over and over again. Frankly, I'm sick of hearing it, okay? So you switch to a cash account. PDT rule only applies to margin accounts. So what do I mean when you have a cash account? Well, check it out. Let's say you got 5 Gs, right? And you buy an Apple call with $1,000, okay? Let's say you buy, I don't know, 1 contract for $1,000 or 2 contracts, whatever it is. Okay, and you sell out the same day, and let's say you sell out for flat. All right, in a margin account, you would have the whole 5,000 ready for you, available to use because you have margin. Okay, your broker's going to be like, all right, I got you covered. Remember, these trades take a day to cover if you're trading options. If you're trading equities, it takes 3 days to cover. All right, this means clear through the clearing firm. This is all back-end stuff, which nobody cares about, but you probably should. All right, now. In a cash account, that $1,000 just wouldn't be available to you. Now you only have $4,000 available. Okay? Then you make another trade with $1,000. Now you only have $3,000 available. But you can do whatever the hell you want as long as you got cash available to trade. Okay? That is your answer. All right? Make sure you. This guy. Let me just close this stupid thing out. Okay. Let's see. Next question is from Donovan White. Why would I submit an option limit order? It shows me second in line on the level 2. Example, box 45, me 10. Okay, in level 2. I think I'm next to be filled, and all of a sudden all these exchanges start hopping in front of me at the same price.
Welcome.
Everyone's at a 1. I jump in front at 105, waiting. Then all of a sudden, SIBO, NASDAQ, Philly, everybody starts bidding 105. Okay, well. All right, check it out, man. This is going to be a sort of dumbed down answer to this question. There's a lot of advanced things that could be going on here, but this is a dumbed down answer to this question. You got to think about when does retail money want to get into an option? Retail money wants to get into an option when it looks like there's a move that's about to happen, right? So now everybody's bidding up. Everybody is bidding up for this thing, just like you are. All right. And then when the market makers see that influx of aggressive bidding higher, okay, they're going to start stepping up their bids as well. Okay, because again, they're in the business of providing markets. All right. So that's essentially what it's a cascade effect here. Everybody wants to get in. Market makers see the retail money getting in. Okay, and then they slowly push that bid up. All right. So no matter what. If you're timing your move and you're trying to get a bid, you're not going to get that filled, okay? if you're trying to do it at the same time that, again, the move is happening, what you have to do, unfortunately, is take the offer. Okay, that is your solution to that question. You have to take the offer. Either that or start anticipating the moves. Okay, and don't start hopping in when everybody else wants to hop in. Okay, that's how you become, that's how you become a little bit more advanced in your trading. All right, if that doesn't make sense to you guys, maybe we can bring that up on the next one. Okay, so we have Michael Salisbury. What kind of rates are out there for options per lot? Retail, I'm paying $125 a contract, and it's way too much money to scalp and swing trade. 1 month I was scalping Alpha weeklies, made 10 grand, but paid 5 in commission. I'm trying to do 100 lots now, but man, if I scalp, he said I'll get raped in commissions.
You don't know anything about that, right?
I don't know anything about it. I mean, what would I know?
You've never experienced that.
Yo, guys, back in 2000, let me tell you guys. Let me tell you something. Back in 2009, I paid Fidelity, $450,000 in commissions, somewhere around there, to the tune of 450, and I was trading 75 cents a contract, guys, right? And I'm talking about hundreds of thousands of contracts, all right? In 1 month alone, I traded like 300,000 contracts, and that was when I did that Citigroup trade, in and out, in and out, in and out. So we pay now because, again, we trade aggressively, and when you trade over 100,000 contracts a month, you can negotiate your prices down. We pay an effective rate of maybe like 18 cents right now.
And when you have Peter Zhang,
right,
magic in the back. Right?
You also do have an Asian guy that's hustling and wheeling and dealing out there too. Yep. And there's people out there that do a lot more flow, or even the same flow that I do, and pay a lot less. We're talking about 10 cents. We're talking about single digits here, and you guys are getting charged $1.25. So for you, man, for Mike, immediately right off the bat, you're probably with Scottrade or you're probably overseas. Okay, if you're with Scottrade and you're in the U.S., friggin' switch immediately to, Thinkorswim or one of the other retail platforms that you get 75 cents at least on, all right? IB might even start you out with 65 cents a contract, okay? Luckily for all of you retail guys out there, commissions are starting to come down. So I think within the next couple of years, things will really calm down. Scottrade will definitely not be able to continue charging $1.25 every single contract, because there's no way they're going to be able to keep up with the competition. So for those of you who are overseas, you're shit out of luck, man.
Yeah, we've worked hard to try and find stuff for people who are overseas, and
right,
it's rough, man. I mean, we continue to look for it, but we don't have anything right now.
Right, and Mike, man, I like this guy. Mike Salisbury here. Totally feel you on enjoying seeing that money in your account and then feeling like shit when it evaporates. I was up 75K on this trade, attached, and gave back 70. Very poorly played, and apparently it was a trade in Facebook. Yeah, it looks like it was a trade in Facebook. Okay, and Sydney's thinking of joining our room. Come through, man.
Join the room.
Join the room. Dan. Jacom? How would you say that? Being a white person.
Jacom. I would do exactly what you just did. Jacom?
Nice job on that fig trade. I liked how you spread out the orders so you could conceal your ins and outs. Can the smaller retail investor do this, or was that because you were playing with so much size? I talked to my broker, and for me to replicate that, I'd have to phone orders in. Just wondering what your experience is here. For most of you retail guys, you shouldn't be so heavily worried about exchanges, routes, and fills and things like that. The first thing that you need to be worried about for most retail guys is, can you make winning trades? Is can you really understand when moves are going to happen in a particular stock? So you got to get a feel for winners and losers first. And then once you get your size up, then you can start focusing on the little things that can add to your bottom line as well. So for retail guys, don't worry too much about what exchange you need to hop in and all that kind of stuff. If you're buying 4 or 5 contracts, nobody cares, all right? Not trying to be a dick, but nobody cares. All right, then we got, lastly here, we got Jay Schneider. Who also gave us an application for?
I mean, he's in the top 5.
Oh,
we're about to do scholarship stuff.
All right,
guys,
so we got Jay Schneider here. I got my start in the futures market, and I'm just starting to look at options. What is the difference between trading options on futures and those on equities? Okay, advantages, disadvantages, challenges unique to each asset class. Well, let me get that one. Let me get that one first. Here's the deal with futures. You need, if you're going to play futures, you need a solid feel for the markets, okay? The reason why I trade equity options is because there's tape that you can manage, okay? You can't read tape on the S&P. There's too much volume going on. There's no tape to it. You know, all you're really looking is for super heavy volume, you know, and maybe bits and pieces here and there. I can't read a tape like I could a Priceline or a Google or an Apple or a Tesla, things like that, you know. So for futures, to me, the immediate disadvantage is that similar to Forex, and again, I'm not here to compare the two, and I'm not an expert on futures or Forex either. You know, personally, I think with futures, you need to have experience with timing. You need to have experience. You need to have a good instinct. And in order to build that instinct, I mean, you got to take your licks. You know, you have to get a good feel for the markets. You have to get a good feel for what moves the markets. You know, and then how those things change over time. And then with Forex, to me, like there's no edge. There's no edge. Everybody's just looking at a chart. There's no tape. You just look at a chart and say, hey, yeah, let me give that a shot. You know, and to me, it's like a 50-50 shot. So again, I would say the challenge to options on futures is essentially you just have to have a good instinct about the situation. With equities, if you can read tape, if you understand how to read tape, you know you can time some big moves out here, some really big moves out here. Yeah, that's about it. And then Jay is saying, is it possible to leverage the advantages of tape reading you have observed, I think I answered the question, in the equities markets with the futures markets? I don't think so. I don't think so. I think you can utilize it to some extent. I think you can filter your tape out if you're looking at the you know, the ES futures or whatever. You can filter it for a certain volume and things like that. But again, you just have to have an extremely solid instinct for those trades. Richard here in the chat is saying SoGo trade has $5 base and 50-cent per contract commissions for retail accounts. So
$5 ticket.
$5 ticket and a 50-cent per contract.
I mean, unless you're trading huge, you got to be trading good size though. $5.
Apparently, he's saying for retail accounts.
I know. So to make that a good rate, you got to be trading pretty decent size because that $5 per ticket fee.
Yeah.
You're gonna get screwed up.
Yeah, the $5 ticket fee might eat you up a little bit if you're trading.
If you're trading 10 contracts, you're adding in another.
Yeah.
You know, it's basically 50 cents per contract.
Yeah. Jay's saying, finally, do you grab with both hands or just one?
Grab your balls.
Oh, I mean, the right hand, man. It's you know,
Sure.
It's the right hand. Whatever your hand is, you know, unless you're ambidextrous.
Your dominant hand, unless you're Peter Zhang.
All right, so that's it for the questions today. What we're going to do now is announce the winner for the scholarship.
Yeah, guys, so we had a lot of people apply. Very cool. Lucci and I, all of us really appreciate all the work you guys put into it. A lot of cool stories, some pretty borderline scary stuff going on in there sometimes. Some hilarious memes and stuff like that. So anyways, we really appreciate all the work you guys put into it. So we're going to do, there's actually 5 people who've won things here.
Oh, yeah, my bad.
There's 5 people who have won something here, right? So we have our numbers 5, 4, and 3. They each won a free month to the chat room. Number 2, we're going to give him either a $500 discount on the 12-day course, if he does want to take it, or we're going to give him free access to the starter course, which is $250. So whatever you want to do. And then the winner gets just access to everything. So
right. All right. So let's start with the runners up here.
Yeah.
All right. So free chat room for a month. We got Jay Schneider, who also threw out a question for us and apparently loves grabbing his balls. And then we have Richard Hogan. And we have Harvey Jones.
Congrats, guys.
Very good, very cool. Free chat room for the month is big. We are audio mic'd in and everything, so you know, the people lately, especially, they've gotten quite a treat. You know, just seeing me go through all the crap that I went through in the past week or so. And then we got a runner-up. This is our number 2 place, and he's the one who also gets a free month for the chat room, and also could do free access to the starter course, or gets $500 off on the comprehensive course. And this is James Reyes, who, by the way, we love that rap, man.
Yeah,
this is tough, man. This
like, guys, so you know, James, he had a great application for one thing. I mean, one of the things we're looking for, people who, you know, not only have good stories and stuff, but who clearly, you know, they take it seriously. They're not sort of delirious in their belief of themselves. I mean, they have we feel like they have really good potential. They have, you know, they have the ability to commit to what they're about to do.
Right.
You know, we don't want to give a scholarship and then, you know, the guy's like, you know, I can't trade at all. I just think you guys are cool.
Yeah.
So, you know, James has all that, and he wrote a rap.
And he wrote a rap for us. We should honestly,
was pretty good.
Which was actually really good.
Yeah.
And this is Boricua trader. So his Puerto Rican ass is actually, I think he might have changed his handle. So I've like known him in the Twitter world for a while now. So it's very cool that you know, he's now on board and everything. So and then we have our winner, which is Adam Pimentel.
Yeah.
And he wrote a 10 how to lose 10 grand.
It was how to lose $10,000.
How to lose 10 grand in 20 days.
20 steps to lose, $10,000. I think is what it was. And it was genius, man. I mean, it was like, I mean, he basically gave us the story of his you know, start in trading, and you know, took us through every mistake that a beginning trader makes. You know, guys clearly very self-aware and blowing up accounts, following the wrong people, you know, the whole thing. But I think what really got us was, you know, he said, I'm fighting everything I've got right now, fighting my instincts to just jump in and do all the stupid things that I was doing, because, you know, I know I gotta take it up a notch, you know, and I'm waiting to get educated in order to be able to pull that off. So, you know, we really feel like that level of self-awareness, that level of dedication is a big indicator for success. So, Adam, we're looking forward to having you in the course, in the chat room, everything we do.
Definitely, man. So congratulations to Adam. Muspet is in here asking what the best meme was. And honestly, I'm just going to show this one because it's the best meme that was shared today.
Yeah.
This was the best meme that I've seen in quite some time. And call me Big Daddy when you back that ass up. And, of course, you guys know this is the lovely Juvenile song, which is played at high school dances all across the country.
I have plenty of blurred memories.
All across the country. And you have parents everywhere freaking out. All right, everybody. That's it for the mailbag. Once again, congratulations to Adam and for the rest of the runners-up. We won't be here next week.
But not be here next week, guys. But I think we're going to do Tuesday next week, though. So, guys, we're doing Tuesday afternoons, 4:30, BTFD TV as well. It's not Q&A. It's more us coming on and just talking about what we want to talk about this week. Brian Weiner and Peter Zhang were on, and they had some pretty high-level conversations, man.
Yeah,
I mean,
they did.
If you guys are just trying to learn, just watch what these guys are talking about on there. I mean, it's very cool. So,
all right, guys. Until next time.
Have a good one, guys.
Later.